Hi guys, hope you're doing very well. In this video, I will be showing you guys how easy it is to identify higher probability trade setups. So do well to stay till the end of the video if you really want to change your trading game, taking advantage of the best trade opportunities the market provides you on a daily basis. Well, let's get right into it then. Higher probability trade setups really have so much to do with confluence, guys. Yes, you heard me right. The more the confluence is, higher the probability of the trade going in your anticipated direction. Here I have made a small document explaining this concept right here with a live chart example and breakdown to shed more light on this. So if I get 50 likes on this video, I'll be putting up a downloadable link to this document in the description. Yeah, guys, 50 likes and the link will be made available in the description so you can go through. Yeah, a perfect example of this concept is the Jump 50 index trade I took yesterday. And I will be breaking down the reasons as to why I got in on the buy trade. Looking at the weekly time frame on Jump 50 index, are clearly bullish. On Jump 50 index, where we had previously broken above this valid lower high. So we had a clear break of that level, switching the market structure on the weekly time frame from bearish to bullish, and not just having what price creates the higher high, at the break of the structure, we also add what the weekly retest of the structure, and then a bounce off from what previously the level acted what as a resistance, and then we had a break of the level. The previously broken resistance becomes a new structure. You can clearly confirm from the weekly time frame what we bounced off from that level, seeing what a clear rejection candlestick as well as what a bullish engulfing candlestick off of the level. So we have the weekly time frame bullish. Then moving down to the daily time frame, we clearly had also the daily time frame bullish. So we had a low here, we had a high, we had ourselves a higher low, and then what? We had what ourselves a higher high. signifying what? That the daily time frame is what? Clearly bullish. With this being the what? With this being the previous swing low, the previous higher low. So as long as price stays above this low right here, we are still very much what? Bullish on the daily time frame perspective. And then what did we get to see? We had ourselves what? Not just a 100% retracement of the previous swing low. We had price coming to that level, and then what? We had a nice daily rejection candlestick level, printing us what? A daily double top. So we had the first retest of the level, then what? The second test of the level, giving us a daily double top from the level. Yeah, so we have a psychological number, 28,100, and then you can clearly see how the level is a key level. Looking to the left from the daily time frame, we had what? Price coming to the level, and then we had a rejection from the level, by the resistance, by the second time the resistance, third, fourth, fifth, and then what? We had a break of the level. We had somewhere around here, we had the level acted what as a support, and then what? We're back to the level again. The level expected to act also as what? As a support. So we had what? A daily retest of key level. A daily retest of key level. We have a daily double bottom. Are clearly bullish on the daily time frame. And also we've established the fact that what? The weekly time frame is also bullish. And then take notes, guys. Not just are we seeing what? A daily rejection candlestick, which is what? A reversal candlestick pattern, form what? At a key level. Psychological and number 28,100. We're also having to see what? Price rejects the exponential moving average. And since price is below the exponential moving average, in this case, expected to act as what? As a dynamic support. So you can see when we tested the exponential moving average at this level, we quickly what? Bounced off of the exponential moving average. And then we came now a second time to test the exponential moving average. And we're having to see what? Price rejecting the exponential moving average. So we have what? A daily rejection of what? Exponential moving average. Daily reversal candlestick, daily double bottoms, which is a reversal chart pattern. And then taking this down to 4-hourly time frame. The 4-hourly time frame had a clear shift in structure. From bearish to bullish, as we can clearly identify. So we're temporarily bearish on the 4-hourly time frame. And then we had what? A rally, a price rally that took out what? Previous lower highs, switching what? The market structure from bearish to bullish market structure. So yeah, guys, we have what? The weekly time frame bullish. We have ourselves the daily time frame bullish. Also, we're having to see what? The 4-hourly time frame what? Also bullish. We are having what? 3 time frames in sync. And then on the 4-hourly time frame, we and get to see price pointed us a not so perfect inverse head and shoulder pattern. A not so perfect inverse head and shoulder pattern was printed on the hourly time frame. This being what's the left shoulder. Then we had ourselves what's the head. That led us to what the breaking market structure. And then the retests of market structure forming what's the potential right shoulder, which is what? A bi-reversal chart pattern. So not just are we having to see what? That the 4-hourly time frame is also shifted from bearish to bullish. We're having to see price print us what? A bi-reversal chart pattern on the 4-hourly time frame, which is what? An inverse head and shoulder pattern. And this takes us down to the hourly time frame. From where we had our entry signal to go long. Moving down to the 1-hourly time frame, we can clearly see how we had what? A shift in market structure also from the hourly time frame. From a temporary bearish market structure to what? A bullish market structure on the hourly time frame. So safe to say also the hourly time frame is bullish. So here guys, we have the weekly time frame bullish, the daily time frame bullish, the 4-hourly time frame also bullish, and then what? We're having to see the 1-hourly time frame bullish also. Then we had ourselves, if you can see very well, an inverse 1-hourly head and shoulder pattern at the head, and then potential right shoulder, but ourselves a potential right shoulder. Also, with the potential right shoulder rejecting off of 50 exponential moving average. So you can clearly see we had what? From the 1-hourly time frame, we had a crossover of the exponential moving average from the bottom to the top. And then what we had ourselves was a retest of the exponential moving average. And because we are above the exponential moving average, we're expecting what? In this case, the exponential moving average to act as what? A dynamic support. So we have a crossover and then a retest of the exponential moving average, potential what? Right shoulder. And then if you can identify very well, we can see we tested this level the first time, and then we're only having to see price give a second retest of that level. So the level right here, what the first retest of the level, and then what? The second retest of the level, giving us what? The 1-hourly double bottoms, which is also what? A reversal chart pattern. So not only are we having to see what? the 1 hourly inverse head and shoulder pattern. Clearly, we can identify what? The 1 hourly double bottom from what? This hourly key level. And then what? A retest of what? Exponential moving average expected to act what? As what? A dynamic support in this case. So we have ourselves what? At a number of confluences. With the weekly time frame, bullish. And then the daily time frame also bullish. We had clearly identified what? Price retests of daily key levels. Price retest of daily key level. Also, we had daily double bottoms. We identified what? Daily rejection candlesticks. Of the key level. We had a retest and what? A bounce off of daily EMA. We had the 4 hourly time frame bullish. We had a 4 hourly inverse head and shoulder pattern. The 4 hourly inverse head and shoulder pattern. And then also we had the 1 hourly time frame bullish. We had EMA crossover and the retest on the 1 hourly time frame. We had earlier established. Also, we had ourselves what? The 1 hourly double bottom. We had identified what? An hourly inverse head and shoulder pattern. And then we had ourselves what? The entry confirmation to go long on this. Having so many confluences already, suggesting what? That the buy trade on this was a no-brainer. We had lastly a 1 hourly bullish engulfing. Why the 1 hourly bullish engulfing candlestick? Just at what? The formation of the right shoulder, just off the retest of the hourly exponential moving average. And that was where we had what? Our confirmation entry to go long. At the close of what? The 1 hourly bullish engulfing candlestick. Somewhere here. And we had a tight stop loss on this. Just below the level. Our take profits were identified from the 4-hourly time frame. Or we're anticipating for price to come into what? This 4-hourly key level. Securing ourselves what? A nice 1 to 4 hour on this. So yeah, that's it, guys. With this number of confluences, who wouldn't take this trade, guys? Well, thank you so very much for watching. And remember to subscribe, which is the main thing. And then don't forget to like and leave a comment, guys. Once this video hits 50 likes, I will obviously be posting the link to the document I prepared in the description of this video. Thanks for staying to the very end. See you in the next video, guys.